Welcome to the Capitalist Sage podcast. We're here to bring you advice and tips from seasoned pros and experts to help you improve your business. I'm Karl Barham with Transworld Business Advisors, and my co-host is Rico Figliolini with Mighty Rockets Digital Marketing and the publisher of the Peachtree magazine. Hey, Rico, how are you doing today?
Good, Karl. Thank you.
Why don't we get started by introducing our sponsors?
Sure. Lead sponsor for this show, as well as the other family of podcasts that we do, is Hargray Fiber. I just want to introduce them. They're a regional company that handles cable, fiber, optic connections, bandwidths large for small businesses as well as enterprise-sized businesses, providing solutions for collaborative work, providing bandwidth that's needed for teleworking, and being able to provide solutions for businesses of all sizes customized to what they need. And they're not the cable company. And I can say that they're not Comcast, they're not AT&T. They're actually in your community, providing services to the community, and they're there to be able to come to your door when you need them. So check them out. It's hargrayfiber.com, or you could go to hargray.com/business. Thank you. Yep.
Oh, that's fabulous. It's great to see businesses that are focused on the business community here in Peachtree Corners and surrounding areas. Today, I am so blessed to get to introduce everyone to Stephen Gu, who is the founder and CEO of Gu & Company, a fractional CFO, tax, and business advisory firm that services small and medium-sized businesses. Today, we're here to talk about EIDL loans, PPP loans, the CARE Act, COVID-19 response. Lots of people have been going through reopening now. They've secured loans from the government and from their banks, and they need to know what's next. So we figured we'd have a conversation about that today. Hey, Stephen, how are you doing today?
I'm good. How are you, Karl? Hey, Rico.
Oh,
hey, Stephen. I got to say thank you, by the way, because I personally use Stephen to help me get my PPP loans. So thank you for helping me do that.
No problem.
Well, you know, Stephen, here on the Capitalist Sage, we're here to try to help people understand different things they can do to help their business. And we've been working over the last several months in helping business owners with cash flow needs and how to access these PPP loans. But before we talk a little bit more about that, why don't you introduce yourself and tell us a little bit about why you do and how you got to do what you do today for so many business owners?
Sure. Really, like you introduced me, we normally what we do is really tax planning and fractional CFO service. But during the COVID-19, we helped a lot of small medium businesses, really help them to secure the EIDL or the PPP loan, and also actually there's other financial resources available. So that's our mission, to help them to get the financial, secure the financial, to help them survive the COVID-19. And right now we are at the second stage. So lots of business already got their PPP loans. So we are helping them how to plan the PPP loan, how to use the fund so that those money could be forgiven. And also there's other resources, other tax incentives, tax aids, and also forecasting, budgeting, how to basically help them to survive and thrive during this COVID-19.
You know, so many business owners, when this started, were caught and were surprised by the impact on people from a health standpoint. I remember you were one of the first people starting to warn and advise of the impact of this. Tell me a little bit about how you were able to start seeing this coming and some of the things you started learning that we needed to do when the crisis started.
Right. I think, Karl, you're one of the people sort of bombarded by me, talking about a PPP for almost 3 months now. And you probably know, I think way back in March, around the middle of the March, you heard me talk about EIDL, that time there are no word for the PPP yet, right? And really, we started helping people get the EIDL because when we help our client, we realize this COVID-19, how bad it's gonna impact business. and we realized there's a EID available. So we start to reach out to our clients, tell them, one, have to look at how much cash reserve you have. And two is like how to take advantage of all those financial aid available. That time is just the family first act. So we started that, and that time when we applied for the EIDL, the website just crashed. That time is only 60, I think it's only $6 billion. And when we applied, the website crashed all the time. Literally, it took us literally 12 hours to apply for one client. And then after we get done, and the website crashed multiple times. And then in early April, the CARES Act came out, and then they added the 10K advance payment. You can request the 10K. That's where the 10K come from. It's added by CARES Act. And then because SBA, I think they probably lost certain data. So they said, hey, whatever you submit doesn't count. You have to reapply. And they made the process extremely simple. Now you go there, you just need to spend less than 5 minutes. Just go submit. You request the 10K. So before that, it's very, very complicated. So that's how it started. And at that time, people, when we talk about a PPP, if you talk to other folks, nobody's talking about that. But nowadays, if you go there, talk to other CPA, other advisor firm, probably they talk nothing but for PPP. So it's a wide journey.
There was a dynamic that happened in this about getting to the front of the line. Those that had people that knew how to knew the urgency of getting these funds and the necessity for cash in their business, along with how to do it, what documents and information was going to be required. I noticed how those people with that finance support were able to get to the front of the line and get loans when folks got through that. What were some of the things that you saw small business owners didn't do properly that might have delayed their ability to get some of these funds? What were some of the challenges you saw in some of your early clients in getting funding?
Well, first of all, for funding, they typically let's say a typical people gonna screw this up is they don't have a solid financial statement, right, for their business, right? Mm-hmm. And some business they don't even issue W-2 if they require. They don't issue W-2, and they did not pay for payroll tax, right? Mm-hmm. Those are screwed the most. Basically those are documents that the bank and SBA requires when you apply the PPP. And the other issue we also see is really the financial is not ready, and tax returns screwed up, and also they sort of they can do it themselves. They sort of the bigger bank gonna help them, and they just key in any number they saw just in the application form, and eventually gonna turn it down. We saw that multiple times. People just put whatever number they think, and then eventually the bank comes back and said, hey, this is not accurate, and you have to wait for another round. And then first round the money run out. You come to the last round, and there are millions of people ahead of you. So we definitely see people screw up because of that.
Yeah. Let me ask you something, Stephen. When you helped me out, actually, they were between legislation, right?
Yeah.
The second time it was coming out, we had talked about putting together the package, and we were ahead of before the legislation passed. So we were doing it ahead of time, right? Hoping that, knowing sort of 90% sure that the legislation was going to pass. So we were ahead of the curve a little bit. But I had other friends that were out there that were applying through banks. And what I realized is that you can't, at the time anyway, many banks did not want to deal with you unless you had an account with them. Or you might have had an account with them, but you weren't big enough.
Yeah.
In essence, a Chase Bank wouldn't be able to do what you want. Maybe a smaller bank could, or a regional bank.
Yeah. So
that's where I saw advantages, right?
Yeah.
Does that make sense? Is that what you saw during that time?
That's exactly, because we were monitoring this CARES Act way before they passed, right? we actually read the Congress version of the PPP Act. We read the Senate version, right? So we sort of know what's going on before the Trump signed that into the law.
Right.
And then before they signed into the law, we already start communicating with the different bank offers SBA lending, right? And to our surprise, we saw the bank were excited, sort of they're going to make lots of money. Actually, we realized the bank is not a very interested, especially a bigger bank. They're saying they cannot make too much money out of this. And their employees like, what, I have to wear the mask, go to the bank, apply, help document all these things. They are not incentivized at all. And then we realized, this is going to cause a big problem, right? Because, and also they told us, like, look, we're going to take care of our preferred customer first. Mm-hmm. I mean, it makes sense. I mean, if I'm the business owner, I want to take care of my the important clients first. So that's when we realized this will be like, this will be chaos, right? And a bigger bank does not necessarily will give you the best service. It will not necessarily have your best interest in their mind. So that's when we try to persuade people, try to tell people, let's say, look, if possible, always go to the community bank, a small bank that you have strongest relationship, that they can take care of you, they can look at your return and look at your application, not necessarily the bigger banks. Mm-hmm. But at that time, lots of people do not trust us, and they're like, I've been dealing with Wells Fargo for how many years? I think during the first round of Wells Fargo, they processed it now. They try to game the system. They try to get away from doing this. So, yeah. This is the first time actually the community bank really represented the meaning of community. First time.
Yes.
Think about that.
Sure.
That you've highlighted a key lesson that a lot of successful business owners have learned is when the crisis hit, everyone ran to their safe place. But those that had built the relationships with their local community banker and local community banks, they saw an advantage in this particular case to do that. And we always try to advise business owners to make sure they're having relationships. We're not saying you shouldn't do banking at the big banks, but you should also have a relationship with the community banks who's able to pivot, move quicker. They know who you are. They get to understand what you need and be able to provide that service to you. But I think you highlighted something else that I wanted to make sure folks realize. The people that were able to get the loans and the funding first had payroll records. They had their financial statements ready. And I know a lot of people may wait till tax time to reconcile their financial statements and to have it. But if you ever need to go to a bank or a lender, all of those records are going to need to be done. And that just really shows, as a business owner, there's an element of the business of keeping up the financial records and your scorecard that's important to be able to react quickly should the business environment pivot.
Right.
So now that we've gotten the loans and folks have gotten the funding, I've seen some news come out about more laws and more rules. And when it comes to, you explain the difference between what originally people signed, everything got easy and they just signed something. But when they signed it the first time, what were the terms of those loans that they got? When did they have to pay it back? What did they have to spend it on? And has there been any changes in that in recent weeks?
Yes, great question. So this is the first time I ever deal with so much uncertainties. For the PPP application itself, the Department of Treasury and the SBA, they issued more than 20 rulings and guidelines more than 20 times, right? And after people get the money, they issued a new ruling that is in May the 16th. So they issued a PPP forgiveness application form. And a few days later, Department of Treasury issued some guidance on how to calculate the forgiveness portion. It's the application PPP forgiveness application form. It's 11 pages. And the Department of Treasury guidance is 26 pages. Okay. And then 2 weeks later, now we just had a PPP Flexibility Act. It changes lots of things, lots of important things about forgiveness. So it's things that keep changing, keep changing. So, and there's a few. Let's talk about before change. Before the Flexibility Act that is passed last Friday, the requirements are, the money you receive, 75% of the loan proceed has to be used on payroll. And for the remaining, you can only use mortgage interest, rent, or utility. Only those 3, okay? And also, you are required to remain a payroll number, right? Like head account. Let's say full-time, so-called full-time equivalent, meaning full-time, or if you have part-time, you have to convert the part-time into full-time. Okay, so FTE, full-time equivalent. So you have to maintain those payroll numbers, okay, people, how many people you have. And then you also required to maintain the payroll level. If your payroll is reduced more than 25% compared to prior quarter, the forgiveness amount will be reduced accordingly. A second requirement. That's third requirement. The fourth requirement is you have to restore your employee headcount by June 30th. And if you don't, then the forgiveness portion will be reduced. That's the older law, right? That's the older law. And now, under the Flexibility Act, the 75-25 split has been changed to 60-40 split. I'll explain why. Okay, that's one big portion. And also, previously you have 8 weeks to use this PPP money. 8 weeks, and then now they extended to 24 weeks. So you have more time to use up this PPP money. Okay, and previously you only have up until June 30th to restore your employee, but now you have up until the end of the year. Okay, and also previously, if your PPP loan is not forgiven, you have to pay back. You have 2 years to pay back, and then now they extend to 5 years. Okay, you have 5 years to pay back. Okay.
Why do you think they made these changes? What was the concern? What were they trying to address that they saw happening?
Well, the biggest one, there's a few things. If you think about it, once people get the money, think of it as a restaurant. Okay. Once they get the PPP money, they cannot use them. They cannot use the money for they can, but even if you got the money, you probably lots of employees there refuse to return back to work. Mm-hmm. One is the condition is not permitted; it's still unsafe, or the restaurant simply is not open yet, right? And the third problem is really the restaurant owners are now competing with the unemployment benefit. In California, for example, California state pays the unemployed people for like $550 a week, and then federal government matches another $600. So that's like the people got like $4,400 a month, tax free, just unemployment benefit. So they are not they don't want to. I mean, if you're for your PPP, how much you pay for the tip workers? Probably less than $4,400. So they're like, I would rather just stay at home, watch Netflix. I don't want to go back to work. Right? That's one. And even for other businesses, they are really not ready to go back to business yet, right? So that means really, you help the employees, but they are not really help the employer, because the money you got really doesn't help you reopen the business, right? And so that's why they extended the time. So say, okay, you don't have to use it within 8 weeks. You can use it within 24 weeks. So you can decide, okay, I want to restore. I will ask the 5 people back first, and then I will add more. Now it don't really make sense now, right? And also previously, if I want to use the PPP money, so if my employee doesn't want to come back, should I call the state to report them? If I report, so that guy will not get any unemployment benefit anymore.
Right.
So really put the employer at a very, very odd situation, right? Now you don't have to do that because now you have up until end of the year to rehire all the people, right? So that's the main concern. There's also other people, like again, they extended to rehire period back to push it back to December 31st. Really, that's coming from the same concern. Like, what if people doesn't want to come back, or what if the condition is not ready to reopen yet? Right. So really, give people more flexibility. And plus, previously you only have 8 weeks to pay to use that money. Basically, cause some issue because you got 2.5 of your monthly payroll. That's your PPP loan, and you only got 2 months to use it. So you really have to think about, okay, what's the way to use it, right? I have to use it fast enough. Yeah. But now they give you more time. So really, the policy is really want to make sure almost everybody can get that money be forgiven, because
it sounds like to me the original policy was meant to be a shot into the economy to get it moving at a point where it's stuck in the mud and it's not going to move, right? Like you said, I mean, customers are not coming back as quickly, right?
Right.
So you got that, and you're right about unemployment. That unemployment runs out. That extended unemployment, I think, in July.
July 31st. Yeah.
Right. So once that runs out, one of the restaurant owners I've spoken to, he's like, the problem is, he says, is that they don't want to work, like you said, because maybe they're getting more money.
Yeah, exactly.
But by the time they come back, some of these restaurants some of them may not reopen anymore.
Right.
But we hope the majority will, and there won't be as many jobs. So they're looking at short-term money as versus looking at the long term, if they're going to have a job 3 months from now or a month from now.
Exactly. So that time the rate doesn't make sense, especially for tip workers. Like, if I hire them back for 2 months and then do I just fire them again before it's not ready?
Right.
It'll make no sense.
Yeah. And then some companies, who did we talk to? That was they had the cheese business, I think. And essentially, you weren't in that. This was a different Zoom podcast, but it was a cheese manufacturer, small business. She had about 50 employees. She couldn't let go of her employees. She had to use the money, because how can you retrain cheese manufacturers, if you will? It's not a job you with someone for, right?
Right.
Yeah. If folks, once you let people go, they might find other jobs in other places and won't be able to bring them back. Yeah. So those are some of the things that people have to pay attention to for the PPP. They've gotten some flexibility, some bandwidth. What about on the tax front? I know they've got a delay to a 6-month delay or a 1 quarter delay, for tax from April 15th. What's the new current deadline for tax filing, and what does it mean for business owners? What do they have to pay attention to in filing their tax? Do they have to make sure it's filed and pay by this new date, or what do they need to worry about, Stephen?
Well, the other actually, I caught a buffet, called a tax benefit buffet from a COVID-19 tax benefit buffet, coming from different acts, coming from CARES Act, coming from Family First Act, and maybe they tried to attempt to add more under the HEROES Act, but it did not pass. So there's lots of things. I think I summarized the 11 of them. I cannot remember them all right now. But one thing is, basically IRS extended everything. Right? Whatever you do before, it's all extended for 6 months. But so majority of the return or form are extended until July 15th, sorry. Summer July 15th. So you have enough time, and you don't have to pay. The payment obligation is also extended. Okay, so you don't have to pay. And besides that, there's many other important benefits available that is worth do some tax planning. Now, I want to make sure people understand the difference between tax preparation and the tax planning. So the biggest problem, Karl, you and I talk almost every week on this. Before COVID-19, I always try to always educate the folks. Tax preparation is really a cost, something you have to do. It's like you got all your information from last year. You give it to your tax preparer, put in the software, and then then send it to IS, right? It's just to report the information you have. Tax planning is really, you have to look at lots of things. Look at legal entity structure, look at your personal goal, look at your life insurance, retirement, look at tax cuts, different CARES Act, all those things, and then come up a strategy. Typically, it's done before the end of the year. For example, under the Family First Act and the CARES Act, there are lots of, for example, there are lots of benefit you can use, you can take advantage. One simple article is called Section 139. Section 139 was drafted really for Section 9, really for 9/11. That time, lots of victims of 9/11. So they passed a law basically said, if there are certain victims, their family or your employees got impacted by the tragedy, you can pay your employee certain amount, right, to really support the family, right? But the sentence was drafted as a national disaster. So if you pay your employee because of national disaster, the employee can pay certain amount to the employee, and the employer got to deduct those expenses. And the employee does not have to include that in their income. So it's tax-free for the employees. It's almost like double dipping, right? But it is really for the for the national disaster relief. So now we have another national disaster, COVID-19. So you can do the same. So for employee, for example, Karl, literally, I think you and I both, with the kids at home, we really cannot work. So we can pay the employee. You can hire a nanny for your employee to take care of their kids so they can work, right? Or you can pay for the internet, maybe computer or camera if they are required to do the work from virtual, right? Or if you have to buy certain something keep them safe, all those, as long as necessary expense to help them to go through this thing, those could be tax deductible for the employers, and tax free for the deductible for the employer and tax free for the employee. That's one, right? And there's quite a few other things. For example, you can always you can get the retention credit, right? If you keep employees, you can get a retention credit, and you can defer your payroll tax for 2 years. So those 15.3%, you don't have to pay it now. You just do a deferral, right? And QIP, that's very important. QIP, if you did some qualified improvement, you are allowed to write them off immediately, right? Mm-hmm. And also, if you have net operating loss in previous years, and you can just, they are allow you to carry back, and then you can convert those net operating loss into cash now, so you can receive a check now. So things have changed a little bit. When we do the tax plan before pre-COVID-19, we always try to focus on how to save people money. But now we are not looking not just saving people money, saving people tax, but also helping to generate cash, bring the cash to your pocket right now. So
that's a key thing that you highlighted. A couple great suggestions, but I know a lot of people are impacted with employees that have to work from home. At the same time, a lot of the childcare services that were traditionally available weren't available or aren't available. And so these are costs that people have to account for because of COVID-19. And if I understand you correctly, there might be opportunities where you can, in addressing some of those things, there might be some tax advantages or tax things you need to understand and know that can be applied to help you in your business.
Yeah, huge advantages, especially people involved in, if they have some manufacturing work, they have some real estate, warehouse related, there's more benefit out of that.
So, as you think about it, we've started off by talking about COVID-19 and all the loans that help push money into the economy. I'd like to ask you to maybe take out your crystal ball a little bit, and you've got a perspective on, the future, both from, you do a lot of business with international businesses that do business in China, North America, all over the world. What are you seeing and hearing, over the next year that business owners should be considering? How, not so much how long this is going to last, but just what should people start preparing for when it comes to cash, the financials of their business over the longer term?
Well, there's a lot. I would say it's hard to predict what the future looks like, but I think the chances are, maybe we're going to reopen, maybe maybe school going to reopen in September. But I think eventually, the risk of have second wave of infection is very high. If you consider giving lots of, if you see people on the right now, you do the protests, lots crowd. I mean, not a lot of them wear the masks. I feel like almost like the second wave become inevitable. So how does that impact the business? I think we need to really consider what if we really have to plan out. What if the second wave is true, will come, and the business have to shut down again? Now, how do you plan, right? How much? You have to look at what if your business just return to only 90%, or 50%, or 20%, and how much cash you have? What if you use up all the PPPs? What if there's no more free money from the government, right? How much your burn rate you have? How much money you have in your bank account? How much money you have before you use up all your credit card loan or other loans? So that's the thing I think is the business really to think about. You do. They have to really think about. And right now we help a client do some forecasting, budgeting. Really look at your cash burn. Look at your burn rate, and do some prediction on how much revenue you can recur, how much to recover the revenue you lost during the lockdown, and in the future how much sort of factor in the possibility of second wave. Anyway, it's really become the exercise of doing a forecasting, budgeting, and get it prepared.
This is critical. We just experienced about 11 to 12 year expansion, economic expansion. So there's a lot of business owners that came into business over that period of time, and they didn't have to focus on the financials, the cash flow of their business for the last 10 years because they were growing consistently. It was predictable. When you enter into a period of uncertainty, and we don't know the probability of a second wave or even other things that are impacting the economy happening over the next 24 months. But planning the financial scenarios, what cash you need, what lending or borrowing or equity injections is going to be needed, where you need to pivot your business, how much will that cost to do? If you need to remodel your restaurant to enable social distancing from its current floor plan, you might need a general contractor and others. Funding that, there are mechanisms to fund that, but you need a plan, financial plan for your business to be able to do that. And that's where, if you have the skill set and knowledge to manage the financial of your business, now's the time to use it. If you don't have that knowledge or skill, now's the time to learn it or to reach out to people that can help you. Your business might depend on it over the next 24 months. So I think it's wise advice that you describe the role of a CFO in your business, no matter their size, because it's looking forward on how to plan for the financial needs of your business versus rearward looking on what did you do last year and how much taxes you owe. So really appreciate you sharing some of those ideas and tips with us. How would people get in touch with you if they wanted to learn more about tax planning, COVID-19, financial planning, and others?
Well, if they already connect with you, just send you an email. But I can also be reached by Steven at gucpagroup.com. That's my email. And I do at one point, Karl and Rico, you probably agree with me on this. I call myself wartime COVID-19 wartime CFO. Really, we have to plan ahead. But I think we will never return to what we were 3 months ago, or even maybe 6 months ago. We will never, because look at, we have 38 million unemployment. Think about that. Even if we add 1 million a month, add a job 1 million a month, that's going to take 38 months. Probably we will never return to what we used to be. So we really need to plan. We need to plan ahead.
Well, I agree with you that we need to plan ahead. I'm hoping that we do return at some point, somewhere. It might take a year. God knows. But with that boom economy for the last 10 years, like Karl said, it's going to be a bit tough to do that anytime soon, I'm sure.
Or industries will change. I think, we are able to adapt. That is one thing that both here in America and around the world, we adapt to changes. After 9/11, flying on planes were different, but the people flew again and people traveled and new industries emerged. Uber is a post 9/11 industry that flourished, and there'll be others. But for the business owners that are out there trying to navigate today, the goal is survival, but also start looking forward to how to change the nature of your business for what the future may look like. Those that are able to do that faster are going to be more successful in the long run.
Yes, especially businesses like Stephen said that have to look at maybe a second wave coming. So just be prepared. To close down again if that's what we have to do.
Okay, not all the business are impacted by the same, right? Some are really, they probably cannot survive. Some are just impacted a little bit. They can bounce back. But some actually it's a beneficiary out of the COVID-19, like e-commerce, some healthcare, So it's different.
Amazon, Instacart.
Well, again, I'd like to thank Stephen Gu. He is the founder and CEO of Gu & Company, a fractional CFO, tax, and business advisory firm. You shared a lot of great information. For some people, this might highlight some opportunities where they can get more precise and efficient with how they run their business. And whether they reach out to their accountant or anybody else or reach out to you, it's time for folks to really pay attention to this important aspect. If nothing else taught us a lesson, when the government had free money to give out, those that knew what to do and how to do it, and those that had their books and records and good, accurate business records, they got to the front of the line, they got the money quicker. And so should that happen again, people have a personal mission to look at their own situations and see if they can make some improvements so they're more ready for the next time. Thank you very much. We'd like to thank everybody for tuning in to the Capitalist Sage podcast. We're continuing to have new and interesting guests come in and talk about things to help you improve your business. I'm Karl Barham with Transworld Business Advisors of Atlanta Peachtree. And believe it or not, this has been a time where people have reevaluated what's important in life. And we have more qualified buyers and investors in businesses than you would think. People are looking to invest in different businesses, and we help them find the right business. If you're a business owner and you decided that you want to move on to other things in your life, there is a process to help get your business sold so that you can do what's next. And so feel free to contact myself, one of my agents, to be able to help you with that. You can reach us at kbarham@tworld.com or visit our website, www.tworld.com/Atlanta Peachtree. Rico, why don't you tell us a little bit about what you've got coming up?
Sure. Before I get to that, Stephen, don't log off when we sign off. Hang in there for a few minutes.
Okay.
And for those that need Stephen Gu's information, I'll make sure it's in the show notes also, so you can track back to his Facebook or LinkedIn pages, or certainly reach out to me or Karl. But Peachtree Corners Magazine. The newest issue is in the mailboxes. I got mine today, so hopefully everyone's getting their copy over the next few weeks. We've been fortunate to have support of the city, local businesses continuing to advertise. So it's a strong issue. This one's about stories that brighten our spirits. So a lot of people doing a lot of different things during COVID-19. People making, so Stephen Chinenis is our cover story, along with 4 other stories of people that have decided to do different things than what they were originally doing. So he's 3D printing face masks. Howell Upchurch is a videographer, but he also creates guitars. So he was making guitars in his workshops. And there's a bunch of people like that, lots of stories. So pick it up. You could pick it up at, there's still places that are carrying the publication that are able to do it in this COVID-19 environment. So check them out. Dunkin' Donuts, Ingles, lots of restaurants that are opened for dine-in. You'll see it there. Or go to livinginpeachtreecorners.com. You can find the digital edition there. Mighty Rockets, that's what I do, social media, videography, and all that. We're still doing gangbusters, so there's a lot of work out there for what I'm doing, for companies that need to get online, whether they're doing a webinar or podcast or other things. I'm busy doing that. So mightyrockets.com. You can email me, Rico, R-I-C-O, at mightyrockets.com, and I'll help you guys out.
Well, thank you again, Stephen, for joining us today. And for everybody out there, stay strong. Keep pushing forward. Take care. Have a great day.
Thanks for having me.
Sure. Take care.
Bye.